What's going on, guys? I'm here in beautiful Washington State in my humble abode, taking a look at some charts here, doing a little bit of a financial planning for myself. Recently I've become more focused on being tax efficient because tax are your biggest expense long term when you're an investor. And I used to focus a lot on day-to-day trades, how to make money within a week, and I'm just realizing that's not efficient. You know, when you trade something within a year's time, you're going to be taxed fully at your income rate in the United States, and if you hold it for over a year, you're taxed at 15% or whatever your capital gains tax is. You can trade day to day. So my strategy, if I have, let's say, 10% of my portfolio in cash, I'm going to use that cash to do swing trades to build that cash position as if it was in a bond. But I'm not going to take all my portfolio like I was doing and trade it like a day trader or a swing trader. I just don't think that's tax efficient. I don't think that's wise. It's more important to step back, look at things in the long term from a macro perspective, and buy your strategy. You know, it's more important to get a long-term strategy, because the guy who's buying the index just day after day, doing nothing but buying the index, is going to beat you every single time, rather than the person who's trying to watch the market week by week and predict what it's going to do. Unless you're a genius, maybe some people can do that. I can't. I'm more of a long-term guy. So, with that being said, we can talk about tax strategies in a different video. But with that being said, let's talk about the markets. The S&P 500 has had its worst week since 2008. And if we're looking at it on the weekly chart, we can kind of see this trend line and then this support line. So a few things have to happen first for all these markets, including the Nasdaq and the Dow Jones. It's got to break through this 200-day moving average and this floor in order for me to declare it a bear market. And if we see that happen, we're going to see it head lower. It might find support here for a little while, break through, and then head for these lows or even these lows here. I can't predict this. This is just an idea of what I think is going to happen. Stocks are still a buy if you like stocks, but they're no longer a buy once they break through here. Stocks are by no means cheap. There's going to be some cheaper companies out there, but the S&P 500, the indexes in general, are not a good buy long term, though they are still in an uptrend. So with that being said, let's go to the Dow Jones, and we're kind of seeing the same thing here. It's likely to keep support on these trend lines here, and it might come down and take this out here. It might head lower. We don't know. This is just an idea. Maybe the market stops here and it turns around and goes up for the next 10 years. Maybe it stops here. We don't know. The point is, once it's a downtrend, you follow that downtrend, and if you want to have that money in stocks still, you can reverse your position and go short on the market using inverse ETFs, which is what I'm going to be doing potentially with a little bit of my capital. But it will most likely be in the Nasdaq, and the Nasdaq's the most scary looking. We don't know where this is when or where it's going to break through the 200-day moving average, and we don't know when it's going to stop falling. But I think the Nasdaq is going to fall the fastest and the hardest, since it rises faster and quicker than the other stocks. It outperforms to the upside. It's going to underperform to the downside. That's usually how stocks work. Now, if you guys are in stocks right now, if you're looking for stocks, the indexes are, in my opinion, I think they're for the lay investor. They're for people who are too lazy or don't have time to go out and find companies that are good. So if you have time, I want you to go and find companies that you like. Go find stocks with low relative PE ratios, with good balance sheets, with low debt, with a book value close to 1 or below 1. And find companies in sectors that you think are you're going to like. You think they're going to do well long term. I think social media is going to be amazing. So what am I doing? I'm buying the hell out of Facebook. That's not advice to you. That's just what I'm doing. I think semiconductors are going to do well long term because of all the computing power we're going to need for blockchain long term. So I'm buying companies like MU or AMD. That's not to say I'm buying them right now. Those are just companies that I'm watching. Let's go over to commodities. The only commodities I'm really watching right now are gold and silver. I really have no desire to be in the oil market. I have no desire to be in the agricultural market. I mostly watch the metals. I'll watch gold, silver, copper, palladium, platinum, and it's mostly just precious metals. And I want to talk about gold real quick. I don't have much time here. Gold is paraded around as the perfect safe hedge against bad times, which I do like gold. You can take physical possession of your gold. You can own hundreds of ounces of gold or silver and nobody know about it. And that's the great thing about gold. You can take it with you. It can be confiscated if someone catches you with it, but the good thing about gold is you can store it like cash and you can keep it off the radar during bad times if you're worried about that. But long term, we've entered into a consolidation period, right? And there's reason to believe that, once this trend line was broken here, I said, okay, I mean, before it broke through that trend line, I was thinking, gold, we could see a really good rally in gold, but now I'm just thinking the opposite. It might grind sideways. It might go a little bit higher from here. I could do a swing trade. I've been thinking about it. But it's likely to grind sideways and lower for years now. I mean, if you look back to the high of 1979, 1980, and you look and see what it did up until 2000, it just grinded sideways for a really long time. Now you could have made some money, like you could have, your investment could have appreciated from 85 to 88. It could have appreciated a little bit from 82 to 83. But for the most part, it's just grinded sideways for a really long time until 2000. And that's 20 years. That's 25 years until people actually saw, any ground in gold. So if you're buying gold, I think it's a good buy. It could do really well over the next years. I don't know what exactly is going to happen. But if you're buying gold, don't go all in on gold. Be prepared to hold that money for 25 years. It's a long-term investment, and maybe everything does go to hell in the next year or two. I don't know. I can't predict the future. Then maybe gold skyrockets. Maybe gold. Maybe we go into a depression and gold, goes down to $500. I don't know what's going to happen, but you have to hedge your bets, knowing that there are an unlimited amount of scenarios that could take place. So let's look at silver real quick. It's kind of the same thing. If you're into precious metals, silver is definitely a better buy. The gold to silver ratio is about 80 right now, so 80 pieces of silver for one piece of gold. If you're into precious metals and you're into the long term, I'd say buy silver between the two. Now let's look at Bitcoin real quick. Into this descending triangle, and as you know, it can be an explosive move in either direction, whether that's to the upside or to the downside. I think it's likely to be to the downside, so I am holding cash here. If we look at the logarithmic chart, Bitcoin tends to consolidate, and this is the trend line I've drawn in the logarithmic. So we could see Bitcoin just kind of grind sideways and lower until 2019, and even head as low as $4,000. But the important thing to know is that's still not a lot of time. That's only 2 years of consolidation. That's nothing. Stocks do more than that. So if you're into cryptocurrency, now is the time to start accumulating and start buying that stuff up, because you're going to be rewarded in the long term for being patient. Guys, thanks so much for watching this video. I try to make it short, 10-minute video. I don't want to ramble on too much, but I hope this gave you a good idea of how to look at things with a long-term perspective, how to have an investor mindset, not a gambler's mindset. Let's wait and see what happens. I'm in the perfect position right now. I have lots of cash. I'm kind of waiting to see how things are going to play out. Keep investing, keep studying the markets, be patient. And let's just see what happens here. I'm excited to see what happens with the Nasdaq and the S&P 500, and see if we actually enter into this bear market that we've been talking about for years. Anyways, guys, thanks so much for watching this video. I hope you come back again soon, and we'll see you next time. Bye.